Hello. Welcome to our next chapter, comparatively less important chapter. So you can watch this, just watch this video and solve some questions. You should be done with. Do not give a lot of time to this. Your next chapter is your clubbing of income. Clubbing of income means when income of some other person, income is earned by some person, but it is taxed to another person. This is called your clubbing of income. So in such, your first section is your 64 1A, that is income of minor child. So since income of minor child will not be taxable to the minor child, this income will be clubbed to the parent whose income is more before clubbing of minor's income. That is between both the parents, whoever's income is more, this child's income will be, this will be added to his income. So it will be clubbed. It will be clubbed with parent whose income is more before clubbing the minor's income. That is before adding the minor's income. Unless that is in what scenario this income will not be added. So if the income is due to manual work, skill or talent, if this income of the child is due to manual work, skill or talent of the child himself, it will not be clubbed, it will be attached to the child. That is, for example, all these kids that act in your uh, series, or any kids that act in TV serials, whatever amount they earn, this amount will be taxed to them because it is because of skill or talent. And if minor child is suffering from any disability, if the minor child suffers from any disability and he gets any income, it will not be clubbed to the parent, it will be taxable to the child himself. Next is, parent will get 1500 per annum per child deduction under section 1032. So this income, even though will be clubbed, he will get a deduction of 1500 per annum per child. Okay, so this is your section 64 1A. Your next section is your 64 1/4, that is asset transfer to spouse. So for example, this person, the husband, transfers an asset to his wife. Now since this asset is transferred between husband and wife, that is between a relative, so this will not be considered as a transfer. However, whatever income this asset generates, this income she will receive, the wife will receive, but this will be taxable to the husband. So when asset is transferred, the husband and wife relationship exists. In such a case, even though the income is received by the wife, it will be taxable to the husband. Income shall not be clubbed if asset is transferred in connection to live apart. For example, the husband and wife have separated, and in such a case, the husband has given some property to the wife. Now, any income that the wife receives from this asset, it will not be clubbed in the husband's income because it is in connection to live apart. That is, they are living separately. If house property is transferred to spouse or minor child by individual, if any house property is transferred to my spouse or to my minor child, remember it is minor child, by any individual, the individual who has transferred the asset, he will be considered as deemed donor, because the income tax knows the boss, you are transferring this only to save on your taxes. So only if it is transferred to your spouse or to your minor child, it will be the person who has transferred the asset, he will still be considered as deemed owner, and any income from that asset will be taxable to that person. Okay. Now 64(1)(2), that is income of spouse from concern where SSE has substantial assets. So for example, there is an SSE who has a substantial asset in a concern. If this concern pays any fees, any salary, anything, remuneration to the spouse of such SSE, their clubbing provisions will be applicable. So for example, the husband owns 20% shareholding. So this 20% is either SSE himself plus relative. So if he holds 20% or more shareholding in the concern, and this concern pays any remuneration to his wife, to this person's wife who owns 20%, and if it is noticed that this remuneration is excess, that is, if market would pay her maximum 12 lakhs per annum, but this concern is paying her 20 lakhs per annum, this means this concern is paying excess of how much? 8 lakh. So now this 8 lakh, that is the excess, will be taxable to this person, and if it is not excess, that is 12 lakhs will be taxable to her, and 8 lakhs will be taxable to him. This is because it feels like this person has substantial interest, therefore they are paying her more money. Therefore, she will only be taxable for 12 lakhs, and this 8 lakhs, even though she is receiving total of 20 lakhs. Out of 20 lakhs, 8 lakhs she will be taxable, 12 lakhs she will be taxable, and 8 lakhs she will be taxable. Okay. Now in another case where this is couple A1 and A2. These are one couple. And this is your second couple. Let's name them B1 and B2. So this is your couple B1 and B2. Now what if A1 gives any loan to B2? That is the wife of another SSE. So if A1 gives loan to B2 and B1 gives loan to A2, you realize this is a cross that they are making, that I will give loan to your wife, you give loan to my wife. So in such a case, this person gave a loan of 8 lakhs and this person gave a loan of 12 lakhs. So since 8 lakh is the lower figure, whichever is lower, and both of them deposited in the bank at the rate of 10%, that is, they are receiving an interest of 10%. So now how much of now this is a very clear cut case that both this is done to avoid any tax clubbing. So this also they've done that since 8 lakh is the lower amount, that is what is common between both of them. 8 lakh will be considered as a common loan. 8 lakh into 10%, that is 80,000. 80,000 will be clubbed in their income. Clear? Got it. So even though the wives are earning, she is earning 80,000 and she is earning 120k. 80,000 will be clubbed in the husband's income, both the husband's income. Okay. Now your next section is any individual. If any individual gives any asset to spouse or son's wife, if any individual gives any asset to spouse or my son's wife and they invest this in the business, in such a case the income from business will be clubbed in the individual's income because he has transferred them, he has given them an asset. Now sir, will the entire income be clubbed? No, only your income from business, that is your total income from business multiplied by, this is the ratio, that is gift from individual, that is whatever gift that the individual has given divided by opening capital of business. So that means your ratio of your assets that your individual has given versus your total business. Clear? So this will be multiplied with income of business and only this portion of your income will be taxed to the individual because this individual gave an asset or gift to whom? To the spouse or son, wife who further invested it in the business. So the business income will be taxable to the individual. Okay, in that ratio. Last, asset transfer to son's wife. If I am transferring any asset to my son's wife, income received by son's wife but taxable to transfer, that is she will receive the income but transferor, that is me, I will be paying the tax, it will be clubbed in my income. And any income transferred without transfer of asset, for example I have any debenture, I own the debenture, but I have told the company that boss, any interest that this debenture receives, do not transfer it to me, transfer it to someone else. That is, transfer it to my son, for example, if I say, so that I do not get taxed, my son gets taxed. That is, income is transferred, but asset is not transferred. Asset is with me. So in such a case, it will be taxable in the hands of transferor. That is, it will be taxable in the hands of me because this asset actually belongs to me, just that my income I have transferred. So since the asset belongs to me, this clubbing will be in my income. And with this we are done with this chapter, and I will see you in our next chapter, that is taxation of business trust, or that is taxation of REIT. Great.